Hi, I'm Trevor Rawson, founder of Authentic Life Financial Planning. In this video, we're diving into Income Taxes 101. So let's talk about taxes and how they work in the US. This section is really going to focus on the federal system because the state system is so individualistic. There literally is 50 different ways that state income taxes can work. Some states don't have an income tax, others do. So we're going to focus in on the federal system, how it operates, and key things to just be aware of as you're filing your taxes. First thing that I want to talk about is that there's actually two tax brackets in the federal system. There's the ordinary bracket, which is how like wages, salary, bonuses, restricted stock vests, non-qualified stock option exercises, all those are taxed on this ordinary income tax bracket system. The second bracket that we have is the long-term capital gains bracket. That really is just for long-term capital gains, qualified dividends. And then the other thing as it relates to equity is incentive stock options if they're held for more than 2 years from grant and more than 1 year from exercise, as well as employee stock purchase plans. Again, if they're held for more than 1 year from purchase and more than 2 years from the offering period, then they hit these long-term capital gains brackets. Now, I don't have a side-by-side, unfortunately, but you can kind of see that the long-term brackets are better in general than, the ordinary income tax brackets are. In fact, no matter where the taxable income lands, the long-term capital gains bracket is always better than the ordinary income tax bracket. And so that's just one thing that I want to make clear is there's two different brackets. Now, the question may be, well, how do they actually like work together? How do they operate together? And what ends up happening is that the brackets kind of like stack on top of each other. So the ordinary income tax bracket starts, that's actually the best way, the most preferenced way to do it from how much tax are we actually paying sort of view. So your ordinary income taxes, ordinary income, is taxed first, and then the long-term capital gain income basically sits on top of that. So as an example, if you're a married couple and you have 100,000 of taxable ordinary income, such as wages, bonus salary, all those things that I mentioned, then some of your income is getting taxed at 10%. Some of your income is getting taxed at 12%, and then just a little bit is getting taxed at 22% federal. Let's say on top of that 100,000, you also have, let's say 25,000 of long-term capital gains. And so what would happen is that 25,000 would be fully taxed in the 15% tax bracket for long-term capital gains. So you'd pay, again, you pay some at 10% for ordinary income. You'd pay most of it really at 12%, and then just a little bit at 22%. And then all of your long-term capital gain income would be in this this 15% tax bracket for long-term capital gains. So that's how the bracket system works. And it's important to know that because then you can understand and kind of plan for, how to exercise your ISOs, how to exercise NSOs, how to sell RSUs that have already vested and now are long-term capital gain. It helps to know that so that we can actually make good decisions on that kind of stuff. All right, had to pause there to take care of something quick. So let's move on. So let's talk about some of the key dates. So for the 2024 tax year, really the only date that matters at this point is April 15th, 2025. That is the tax filing deadline. It is also the deadline to file an extension for 2024 taxes. If you do end up filing an extension, you have until October 15th, 2025, so you have an additional 6 months to file your return for 2024. So that's really the only one that matters for 2024 at this point. for 2025, the key ones now really in the next 12 months here are the quarterly estimated income payment dates, the quarterly estimated payment dates. So the first one for the first quarter of 2025 is on April 15th, 2025, same day as the filing deadline. And then after that, it's June 16th, September 15th, and then January 15th for those dates listed. So if you're filing quarterly estimated payments because maybe you have RSUs and aren't able to withhold the right amount, or maybe you have a stock option exercise, and again, need to make sure you're paying at least something in before the deadline for next year. It's good to be aware of those estimated due dates and making sure that you're paying the right amounts for those. Thanks for watching. If you found this video helpful, please like, subscribe, and drop a comment below with any questions or topics that you would like to see covered. Financial planning is all about creating the life you want. Let's build it together.